What's happening, crypto fam? Get ready for a rapid-fire rundown of the market movers and shakers that you absolutely cannot afford to miss. The digital asset space is a whirlwind right now, and we're here to cut through the noise and deliver the intel that matters. Forget the FOMO, we're bringing you the facts, hot off the press. From breathtaking price swings that have everyone talking to the big players making strategic moves, this is your essential briefing. We've got the data, the analysis, and the energy to power your crypto journey. So buckle up, because the only way to stay ahead is to know what's happening right now. Let's dive into the headlines that are defining the future of finance. First up, we're diving deep into the heart of the storm with a look at Bitcoin and Ethereum's recent wild ride. We're talking about a roller coaster of epic proportions, with price action that's kept traders on the edge of their seats. What's driving these massive swings, and what does it mean for your portfolio? We've got the inside scoop. Then, we shift gears to the analysts who are busy charting the course ahead. They're identifying crucial support levels for Bitcoin, trying to figure out what it'll take to keep this bullish trend alive and kicking. Will the market find its footing, or are we in for more turbulence? Stick around for their expert take. Next, we're examining the broader picture of institutional adoption. It seems like a new era is dawning as major players are actively rebalancing their portfolios. What does this mean for the long-term health and growth of the crypto space? We'll break down the implications. And finally, we're wrapping up our news segment with a look at the significant liquidations that have swept through the market. With over $800 million gone in a flash, it's a stark reminder of the volatility we navigate. What caused this shakeout, and what are the key takeaways for everyday investors? We've got all the details. Don't go anywhere. Hit that subscribe button, ring that notification bell, and let's get this episode started. From peak to panic, inside Bitcoin and Ethereum's wild roller coaster ride. The crypto market is in a frenzy. The digital asset landscape has recently witnessed a period of extreme volatility, pushing both Bitcoin and Ethereum through a dramatic roller coaster of price movements that has left investors and traders alike scrutinizing every tick. This period of intense fluctuation has been characterized by sharp upward surges followed by precipitous drops, creating a high-stakes environment where fortunes can be made or lost in the blink of an eye. The underlying causes are complex, involving a confluence of macroeconomic data releases, shifting investor sentiment, and the inherent leverage within the derivatives market. As key economic indicators are published, they send ripples across global markets, and the cryptocurrency sector, known for its sensitivity, reacts with amplified price action. This has led to significant increases in daily volatility for both major cryptocurrencies, with Ethereum experiencing particularly dramatic swings, suggesting a market that is highly responsive to external stimuli and internal market dynamics. The derivatives market is painting a clear picture of the prevailing sentiment. A negative skew in the 25 delta options for both Bitcoin and Ethereum indicates that market participants are actively hedging their positions by purchasing put options, signaling a bearish outlook or at least a cautious approach to potential downturns. This, coupled with an increase in funding payments for long positions, creates a precarious situation. Analysts warn that if the price momentum falters, this could trigger a cascade of liquidations as leveraged long positions are automatically closed, potentially exacerbating any downward price movement. The open interest in Bitcoin futures has seen a decline, which, while seemingly a sign of reduced speculative activity, can also indicate a cooling off before a potential move. On-chain data presents a mixed signal, with a decrease in daily active addresses suggesting fewer unique participants. Yet a rise in transaction volume could point towards increased activity from a smaller, more active group, possibly short-term speculators rather than long-term holders. This dynamic has been further analyzed as a leverage flush, where periods of rapid price increases, particularly in assets like Ethereum, attract highly leveraged positions. When the market sentiment shifts or key data is released, these leveraged positions become vulnerable, leading to substantial liquidations. Despite the short-term panic and the inherent risks associated with such volatility, major institutional players and corporations are viewing this correction as a strategic buying opportunity. Reports indicate significant purchases of Bitcoin and increased Ethereum reserves by prominent investment firms, suggesting a long-term conviction in the asset class. Furthermore, inflows into spot Bitcoin and Ethereum ETFs have resumed, with substantial amounts being directed into ETH-based funds, indicating renewed institutional interest. The market remains sensitive to pronouncements from central banks, particularly the Federal Reserve, with upcoming economic data releases and monetary policy decisions expected to heavily influence market direction in the near future. Market watchers are closely observing these developments, with many anticipating potential retests of key price levels for both Bitcoin and Ethereum. The current market environment is a testament to the rapid evolution and inherent unpredictability of the digital asset space, where macroeconomic factors and on-chain activity converge to create periods of intense volatility and strategic opportunity. But is this volatility a sign of weakness or a precursor to a stronger rally? We'll explore what analysts are saying about Bitcoin's crucial support levels next. Analysts identify Bitcoin support levels to sustain bullish trend. Navigating the market's choppy waters. In the wake of a significant market correction that saw Bitcoin's price dip below the $109,000 mark on August 26, triggering substantial liquidations totaling approximately $900 million in a single day, analysts are closely examining the key support levels that could underpin a sustained bullish trend. The broader market experienced a notable downturn, with major assets experiencing a correction, driven largely by the release of producer price index data that exceeded forecasts. This economic indicator sparked a wave of trader anxiety and risk hedging in anticipation of crucial upcoming data, including the U.S. GDP report and labor market statistics. The resulting volatility surge, with Bitcoin's daily volatility jumping from 15% to 38%, and Ethereum's from 41% to a staggering 70%, underscores the market's sensitivity to macroeconomic news. Sean Dawson, head of research at Derive, Zeiss, highlighted the role of panic and hedging ahead of these key economic releases. The pessimistic sentiment is further evidenced in the derivatives market, where the 25 delta skew for both Bitcoin and Ethereum has turned negative. This indicates a heightened demand for put options, a strategy employed to protect against potential price declines. Dawson's analysis suggests that by the end of September, Bitcoin could test the $100,000 level, while Ethereum might approach $4,000, reflecting a cautious outlook among market participants. The derivatives market data also reveals a potentially dangerous combination. A decrease in open interest for Bitcoin futures by 2.6%, juxtaposed with a 29% increase in funding payments for long positions. This suggests that while overall interest might be waning, those remaining in long positions are paying more, creating a risk of a cascading liquidation event if the price begins to fall. On-chain activity presents a more complex picture. While the number of daily active addresses has declined, indicating a potential reduction in the breadth of market participation, transaction volume has concurrently increased. This divergence is interpreted by some analysts as a sign that the market's current momentum is driven more by short-term speculators rather than a broad base of organic demand. Timothy Messer, head of research at BRN, described the recent correction as a leverage flush amid market weakening, estimating that daily liquidation volumes could surge towards $1 billion. Despite this short-term turbulence, a countertrend is emerging among major companies and institutional investors who are capitalizing on the price dip as a buying opportunity. Firms like Strategy have reportedly purchased significant amounts of Bitcoin at reduced prices, and Bitmine Immersion has substantially increased its Ethereum holdings. Spot Bitcoin ETFs saw inflows of $219 million after a period of outflows, and ETH-based ETFs attracted $444 million, signaling continued institutional appetite. The market, however, remains under the influence of broader economic uncertainties, particularly concerning U.S. monetary policy and the Federal Reserve's stance, with a significant majority of market participants anticipating a rate cut in the near future. While some see opportunity in the dip, others are bracing for further price tests. We're now turning our attention to how major institutions are navigating this evolving landscape. Institutional Bitcoin adoption. A new era of portfolio rebalancing unfolds. Big money is making big moves. The cryptocurrency market is entering a new phase characterized by significant institutional adoption and strategic portfolio rebalancing, signaling a maturing asset class and a growing acceptance among traditional finance players. This trend is particularly evident as major companies and institutional investors are increasingly viewing market downturns not as reasons for concern, but as prime opportunities to acquire digital assets at more favorable prices. Recent reports highlight substantial purchases of Bitcoin by investment firms during periods of market correction, indicating a long-term conviction in the cryptocurrency's potential. These strategic acquisitions are not just opportunistic. They represent a fundamental shift in how institutions are integrating digital assets into their broader financial strategies, moving beyond speculative trading to long-term value accumulation. The influx of capital into Bitcoin and Ethereum exchange-traded funds, ETFs, further underscores this institutional embrace. Spot Bitcoin ETFs have recently attracted significant inflows, recovering from previous outflows, while Ethereum-based ETFs have seen robust demand. This sustained interest from institutional products suggests a growing comfort level with the regulatory frameworks and operational infrastructure surrounding digital assets. It also reflects a recognition of Bitcoin and Ethereum as legitimate investment vehicles capable of diversifying portfolios and offering uncorrelated returns. The underlying rationale for this adoption often stems from a desire to hedge against inflation, participate in the potential growth of decentralized finance, and gain exposure to a nascent but rapidly evolving technological frontier. Analysts point to the increasing sophistication of institutional-grade custody solutions, enhanced market surveillance, and clearer regulatory pathways as key enablers of this trend. Furthermore, the active rebalancing of portfolios by these large entities plays a crucial role in market stability and price discovery. When institutions increase their holdings during dips, they provide a crucial layer of buying pressure that can cushion the impact of sell-offs. This behavior is indicative of a strategic approach that aims to optimize entry points and build significant positions over time. The narrative surrounding institutional adoption is shifting from one of cautious observation to proactive engagement. As more traditional financial institutions, asset managers, and corporations allocate capital to digital assets, the market dynamics are inevitably altered. This influx of institutional capital not only provides liquidity, but also lends credibility and legitimacy to the crypto space, attracting further mainstream attention and investment. The implications of this institutional pivot are far-reaching. It suggests that digital assets are no longer on the fringes of the financial world, but are becoming an integral part of the global investment landscape. The long-term impact could include increased market efficiency, reduced volatility over time as a broader, more stable investor base emerges, and the acceleration of innovation in blockchain technology and decentralized applications. As institutions continue to explore and integrate digital assets, the era of portfolio rebalancing through crypto adoption is set to redefine traditional investment paradigms. While institutions are buying the dip, the market is still grappling with recent price shocks. We'll dissect the impact of those major liquidations next. Crypto liquidations top $800 million as Bitcoin falters. Traders shaken out in a volatile session. Cryptocurrency markets experienced a significant bout of volatility, leading to a substantial shakeout of traders, with liquidations soaring past the $810 million mark within a 24-hour period. This surge in liquidations underscores the inherent risks associated with leveraged trading in the highly dynamic digital asset space. Bitcoin saw its price dip below the critical $110,000 level shortly after 9:30 p.m., marking a 3% decline over the preceding day. Ether, meanwhile, experienced a more pronounced sell-off, dropping over 7% during the same timeframe to an intraday low of $4,316. This sharp decline in prices was attributed by market analysts to a combination of factors, including over-leveraged positions, particularly following a recent upward trend in Ethereum's price, and heightened trader anxiety surrounding key macroeconomic catalysts. Dr. Sean Dawson, head of research at the on-chain options platform Derive, Zeiss, pointed to over-leveraged positioning as a primary driver for the liquidations, noting that the recent run-up in ETH had attracted significant leverage. He further highlighted a sharp spike in short-dated volatility across the board, which he stated reflects rising trader anxiety ahead of key macroeconomic catalysts. This sentiment is echoed by other market observers who suggest that traders are bracing for potential retests of significant price levels, such as $4,000 for ETH and $100,000 for BTC, indicating expectations of a potentially bumpier path ahead than many had positioned for. The market is sensitive to macroeconomic data releases, and anticipation of reports like the U.S. GDP and labor market data can lead to increased hedging and volatility. Despite the sharp price movements and the resulting liquidations, some market participants view these corrections as healthy for the market's long-term trajectory. Joe Consorti, head of growth at Bitcoin infrastructure firm Thea, commented that Bitcoin spending time around current price levels is a natural part of its market cycle. He added, "We're entering the weakest month for BTC seasonally, which is followed by its, historically, two best months." This perspective suggests a belief that the current volatility is a temporary phase, possibly clearing out weaker hands and setting the stage for future growth. The broader economic environment, including discussions around Federal Reserve monetary policy, continues to be a significant factor influencing market sentiment and price action in the cryptocurrency space. Investors are closely monitoring upcoming economic indicators and central bank communications for signals that could impact asset prices. The liquidations serve as a stark reminder of the risks involved in highly leveraged trading, especially in volatile markets. While significant capital was wiped out, the market's ability to absorb these liquidations and the subsequent institutional buying activity suggest underlying resilience. The interplay between macroeconomic factors, trader positioning, and institutional investment strategies will continue to shape the trajectory of Bitcoin and other digital assets in the coming weeks and months. These market swings are a clear signal of underlying pressures. We've covered the wild price action, the analyst outlooks, institutional plays, and the liquidations. Now, let's do a quick recap. And that's a wrap on today's essential crypto updates. We saw Bitcoin and Ethereum go on a wild roller coaster ride. Analysts pinpointed crucial support levels for Bitcoin's bullish trend. Institutions are diving into a new era of portfolio rebalancing, and crypto liquidations topped $800 million amidst market falters. Don't miss out on any of the action. Hit that like button if you found this valuable. Subscribe to Bitcoin Bulletin for your daily dose of crypto intelligence. Ring that notification bell so you're always in the know, and follow us on all our social channels to join the conversation. We'll see you in the next one.